Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the news dollar versus Swiss franc. Today's date is August 8, 2024. Let's get started. I'll start by looking at the hourly chart. And what we've seen over the last month is a sharp move to the downside. That move to the downside took the price from about 90.50 all the way down to 84.50. Just below that level, as a matter of fact. And the price started to rotate back to the upside. That move to the upside over the last few days got above the 100-hour moving average. Now, the price is moving so fast to the downside that the 100-hour moving average still hasn't bottomed. It's still going lower, and we saw the price follow that moving average to the downside and trading here today, breaking below the level in the Asian session and also in the early U.S. session until U.S. jobless claims came out with the initial jobless claims falling to 233. They're expecting 240. That was lower than the 250 from last week. So it seems like all the heat is off of the expectations that jobs market was getting weaker, and as a result, good news is good news, and so we're seeing the things like the yields move higher. The 10-year yield is now up about 3 basis points. The 2-year yield is up about 5.8 basis points, trading near highs. They were lower to start the trading day, and that is helping to push the dollar versus Swiss back to the upside. Also, there was a lot of flight into the relative safety of the Swiss franc, especially over the last week or so of trading, maybe a week and a half, and that is being unwound as well. Now, technically speaking, the inability to move below the 100-hour moving average with any sort of momentum is more bullish, and we started the data came out stronger, and we did break above the high price from yesterday's trade, and also above the 38.2% retracement of this move to the downside. That's always good news. We like to see that happen, but you see this green line. This green line represents a 200-hour moving average, and the price has been able to stay below that level at 0.86838. We do need to get above the 200-hour moving average to show that the buyers really mean business. They also need to stay above that level because over here the price moved above it, could not extend far above it. Right here, it couldn't stand above it as well. This high right here stalled against the 200-day moving average, and also this trend line right here. So you can see why that didn't happen and why the market continues to move to the downside. So getting above that 200-day hour moving average is going to be key going forward. But right now we're seeing support at the 100, resistance at the 200-hour moving average, and the market looking to figure out which way it wants to break going forward. Taking a quick look at the daily chart to see where we're at. The low price that we saw in trading this week came down to test the underside of that broken trend line, moved back higher. We also moved back above this swing area between 0.8552 and 0.8580. Let's call it. The broken 61.8% retracement of this move to the upside is being tested at the 0.867225 level. Also, there's a swing area within that area, so that's another reason why we may have finding some resistance in addition to the 200-hour moving average. So there you have it, a technical look at the dollar versus Swiss. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.